immediate next trigger that the markets are looking forward to, Mr. Gorakshakar, is also Donald Trump's assuming office on 20th of Jan. Before that, we've already seen so much of volatility at play in the first fortnight of the new year itself. How are you really assessing what could be the impact once Donald Trump assumes office? What is it that is worrying the markets at this point in time? Could there be further weakness after he assumes the office as well?
No, I think, see, Sakshi, if you remember, in this previous term, when Donald Trump was the president, he has a habit of creating news virtually every day on his Twitter handle. And the markets obviously don't like this kind of uncertainty. So, we have got to be prepared for this kind of market. One day he may say something, the next day he may say something else. So, I think clearly what the markets initially are worried is that he might impose a lot of tariffs on certain countries. He's already told the markets his viewpoints on Canada, on the Russia-Ukraine war. So I think when the U.S. president talks this kind of language, obviously there is a kind of concern, and I think India also would obviously observe very closely what kind of policies Mr. Donald Trump spells out for India. Although on a very conservative basis, I think India may not get that kind of impact like what China may get. But I think the markets would like to wait for the final viewpoint from Mr. Trump itself. Now, before before he assumes office, there are lots of expectations that this may not assume the right proportion. So I think that's why the markets are a little scared. But typically, I think India, we may not have to worry that much. But yes, there could be some tariffs on some items which possibly could impact our export potential. That's the worry. And clearly, with the dollar appreciating, the rupee weakening, as it is, the economy is on a weak wicket. So, that also goes against us.
Okay. And what about the FII flows, Mr. Gorakshakar? They've still been, away from India right now. What is it that you're expecting on that front? Will this outflow continue to go on even once Donald Trump assumes office?
No, I think, Sakshi, bond yields still are around 4.6%. So, foreigners, especially the FIs, have got a good incentive to invest in the bond market. So, I think, unless we see bond yields coming down below 4%, I think it's unlikely that, FI flows will start in a big way because clearly with the rupee weakening, fresh dollar inflows are definitely not going to come easily. They have encashed some of their profits and obviously made money on the currency side also. So, my sense is that for the next 3 to 4 months, maybe till April or May, unless the currency stabilizes, and obviously the interest rates in US also come down. I think the good news is that bond yields have started coming down in US. Inflation is down, so I think hopefully April May could be a time when interest rates from the Fed could see a big rate cut. And that could be a trigger point for the FIs to put money in emerging markets like India. So till that time, I think we'll have to face the onslaught of sell-offs.
Okay, got that. Let's also talk about the domestic key trigger that we are all waiting for, the upcoming union budget now, Mr. Gorakshakar. What is it that you believe markets are expecting from this upcoming budget? Do you see anything that the government could do in terms of any policy changes that could revive the spirits in the domestic markets and the retail investors?
No, I think clearly, Sakshi, after last year's budget, I think the markets are really not having very high expectations from this budget. Uh, Most people are saying that if something negative doesn't come, that itself is a big positive. I think clearly, there was some news reports that possibly GST could be extended to various other smaller ticket items. Now, that was something which sent shivers to most of the, industrial kind of, companies because clearly, I think the markets are looking at some sort of support for consumption, for, more purchasing power with the middle class in India. So I think if the government really wants to give a boost to the capital market and give a boost to the overall market sentiment, I think they should focus on consumption related initiatives. They should also encourage capex related activity. And most importantly, they should not give any negative surprise for the capital markets. Like last time, apart from the taxes on on the option side via increased STTT, they also increased the long-term capital gains tax. So I think that was completely unintended, and it did not meet the desired kind of objective. So I think these kind of things, if the market does not get in this budget, I think the market should definitely get a sigh of relief. But consumption is something which I think if they do make a conscious effort, then I think that's going to help, overall the economy also to grow. So I think we'll have to wait and watch. But overall, I think no negatives itself, if they come, that will be perceived as a positive this time by the markets.
Right. No negatives will be a positive in case the budget has to be seen. But again, in the run up to the budget, there are several favorite sectors that again garner a lot of investors' attention. Today, also, you see a lot of defense names that are buzzing in trade. HL, for instance, is 5% higher. You have these railway names that are buzzing in trade as well. IRCTC, IRFC, all of them up and about in trade as well. You have the fertilizer names that have been doing well since morning trade today. What is your own suggestion to retail investors who are looking at these key pockets in aspiration of higher allocation, big announcements coming in that could impact this sector, sir?
No, I think see railways and defense are definitely areas where a lot of money will be spent. In fact, a couple of days back, I think RVNL got a 9,000 crore order. Then I think Bharat Dynamics got a 3,000 crore order. So orders are flowing very well, and the government wants to encourage domestic production of defense items. So that gives a significant scale up opportunity for domestic players. As far as railways is concerned, also I would not be surprised that the markets definitely would be pleasantly surprised if there are some more tenders given out for wagon companies, typically for rolling stock. And I think clearly the market is also looking at the fact that railways is in expansion mode. Specifically on new trains, which come under the Vande Bharat, kind of category. So I think you're going to see a lot of noise around these two sectors, and that's the reason you're seeing a lot of buzz in these stocks. But I think clearly, my sense is that sectors like cement, capital goods, or for that reason, agrochemical, like you mentioned, fertilizer. These are sectors which affect the masses. So if here the government announces some reliefs, specifically on raw material kind of concessions, or maybe on the end product GST categorization, that would help these sectors, and I think that would be a good opportunity for these sectors to outgrow in the coming financial year. So I think we'll have to wait and watch, but I think it looks the typical theme: infra, agri, as well as defense, railways. And I think mass consumption. I think if consumption is given the benefit this time in this budget, then I think it will signal the government's intent that they really want the middle class to actually come and spend more. And for that, obviously, incentives like increasing the standard deduction, or increasing the tax slab, which I think are long overdue. So these things I think will boost up the market sentiment.